some few days ago, we did AMD midweek reversal on gold, historical performance of midweek reversal on gold, which we show you. We put it up on YouTube and show you the whole thing from the beginning of this year, even from late last year till 2nd of June. So we have AMD midweek reversal, Wednesday, Thursday, Friday, happening as in consistently. And as at 1st of June, come to 1st of June, it has given almost about the 8,621 pips in that report, in that video we uploaded into the YouTube. So that means last week Wednesday too was marvelous on the AMD. Yeah, last week Wednesday. This is last week Wednesday. Yeah, this last week Wednesday. You can see it. This is so this is Friday. This is Thursday. This is Wednesday on the 8th of June, Wednesday. We have this on Wednesday, right? So you can see it here. My price took out the previous day high, the Tuesday high. So then what do we have there? We have the reversal down. After that high has been taken out, we have the reversal down. Right? But initially, price was moving down from impulse. You get this as impulse, then we get it as pullback into it, right? As pullback into it at what time? This is 7 a.m. This 7 a.m. we have a reversal. The reversal up. Because the price has come to what it has come to this demand zone. This is compressed back into this impulse. Then we have what? We have this leg of this structure to manifest it, ABCD. Then probably gonna be, and because daybreak has been down, right? Daybreak has been down into a compression, a demand compression. Then we have at London, we have price moving back into New York. Then New York starts distributing. Sorry, this is New York. New York came down again, taking up the low of London session. Then what do we have? Opposite of it, we have bullish day, bullish rally. Then price starts because we are on midweek. Just understand it. Tuesday took out the rally, so Wednesday will be opening of Wednesday, just a return to it, just a retest of it. As Wednesday completed the AMD stuff by taking off the previous day high and previous day low. This is the previous day high of Monday was taken out. And I told you about this. Those are the points I'm confident that you can use that will give you an edge, that will boost your signal. The same time, Wednesday took off both Monday and London, and Tuesday high. Previously was taken out at the same level of Wednesday. What do you have? You have a massive drop. So you just take note of that. If a particular take out of, like this place now, there has been overextended rally or a decline, and a particular session took out the entirety of either 1, 2, 3, 2 or more than one session. You go have, if you watch my distance very well, that my AMD Midweek is very well. You get my point there. Like this place has been overextended in rally. And overextended, and we have this as it's Friday. So Friday came up to take up the listing, to grab the liquidity there. And because this is Wednesday, because it has been in overextended decline, and you see that, and you can see to the fall of Wednesday, New York. Of Wednesday, then we have a rally upward, almost about 4 to about 456 on Wednesday low. Then so exactly what's happened here, right? Down today is so on the 8th of June delivered as we expected. Then Thursday will be a retest of faith. You don't expect Thursday to be above it anyway, because it has already completed the cycle of that AMD. AMD, yeah. So this thing will happen here. This accumulation, manipulation, distribution. So we'll be talking about that high of a thing. So you need to just, if you are very well versed with the London and New York market, you see that they are very, very consistent. So we did on gold, and what I'm going to show you is on EURUSD. EURUSD has been fantastic. EURUSD has been so much fantastic. You know, Euro moves sometimes in correlation with a DC. So this is EURUSD. Can you see that this is on the 9th of which is Thursday, on the 9th of June. This is accumulation. This is accumulation. The previous day taken out. Price was ranging, accumulating previous high and low. Then we have a manipulation above Tuesday, above where is the high. Then what do we have? Price start distributing into the opposite. So almost about exactly what you have a New York type 13. There was manipulation to the New York open. Then see this pin bar. Immediately you see the pin bar, you go to your lower time frame. Then you start moving that. We will see do that. How do you trade it? How do you entry pattern? If you are in my group, I'll be posting a lot of this in there pattern to entry pattern. How do you can use your Fibonacci, use your SH plus BMS plus RTO. So that means you're going to get this. This is SH. You're going to wait for a retest. Then you sell down. You sell down. This happens where this is a range accumulation, right? A range into this demand. We have a stop hunt into this demand, previous demand zone. This is demand zone. Then we have what we have at London. Can you see that this is a retest of it? This is a retest of it. SH, BMS, RTO, a retest of it. SH, SH, BMS, and RTO. Price moves at London open 8:30. 8:30. Can you see that? Not opening session. Then we have a drop. And I told you in AMD what you have. Once market moves high, it has recovered the high of the day, right? At this level. Then there was a retest of that of it. So that will give you this pattern. You're looking for this pattern. Looking for this pattern. Stop hunt. Then probably a liquidity graph or PMS. This is what you look out for. Yeah. So this is what you look out for. This So you look out for this pattern. So that's the distribution of profits. So distribution starts from there. Yeah, you look out for that pattern. If you happen to be at the bottom, so that means you're going to look out for what's like this place now. Like this place now. So you're looking for this pattern to buy. That's stop hunt. Then we have a retest of it. Then distribution into the opposite distribution. of profits. See, so what you look at for exactly what happened here too. See, stop hunt, then distribution into the opposite. Stop hunt, London, 9:30. At 9:45, what happens? Price starts. Then this is retest, something like this, like this. You have this, you have this, you have this, then distribution. So this is stop hunt, your stop hunt here, then a retest of it, then distribution into the opposite. So just that pattern is what you need. It's what you need. So you can imagine this happens at London. So it's distributed into London opening. Then from London opening, you start seeing pulling back downward, selling into the opposite on New York. This is London, right? They pull back into this place at London. Then you start seeing price move back. Then New York, they pull back into New York open. Then start seeing reversal downward. This happens at London, right? Then probably at New York. This is New York. See the big drop. So it comes with a structure. This is a move into manipulation into New York open. Then we have this pin bar, then it's meant to the opposite. This is London, 9:45 or 10 a.m. into 10 a.m. London, then we have SH, then we have a worth distribution to the opposite. This happens at the US, right? So all this thing, you just got to get your entry pattern. Like for example, this place you have your flip zone here. If you go to a lower time frame, you get your flip zone. Then the price was still retesting that imbalance, and you have an imbalance and a flip zone, what they call flip zone, right? And that flips or breaker block, or how they call it, that they name for it. So you can use that as your entry pattern. This happens at London open. The retest of it at London open, then price move back into the opposite. This happens at London 9:15. Very consistent. Very consistent. This happens at this is 8:45. Then price moves in a range. Then at New York, what happens? Price move higher. Yeah, this happens at London. Then this is a retest of it at New York, and price move down to the opposite. So just that intraday market session will give you a boost. Then use your whatever your entry pattern. I'll show you this in the entry pattern. Just get your SH, BMS plus RTO. That's your entry pattern, or you use your continuation pattern. Please just go to my whatever. Go to my stuff to see the post. I've been posting on that. If you're still looking for like the entry pattern of this is entry pattern. This entry, you can see this as entry pattern. We have this as both entry reversal entry pattern and continuation, right? This is continuation. This is a reversal pattern. The reversal pattern, then a continuation. We have this as continuation of it. Yeah. If you are buying, right? If you are buying, then if you are selling, that means it's going to be something. You're going to be the opposite. It's going to be the opposite if you are selling. imagine. So this is selling. See, this is the entry pattern. This is what I give them in VIP group. This is if you are buying, then for reversal pattern, then if you are selling a reversal pattern, then continue. Subsequently you use your continuation pattern, right? So that's the setup there. That is setup. So just that I've just shown you that it works also on gold and Euro USD. That is the bottom line I'm trying to say. Not only gold, because I did that on gold earlier. Because some people will say, be asking, is it only on gold? It also works on Euro USD. Like what happened yesterday? See it? Price high was taken out, price moved to the opposite. As it moved to the opposite, yesterday low was taken out. Yesterday low and all this day low were taken out. Price has been in an overextended decline. That's why you see the FOMC moved after FOMC. We have a move upward above. You can imagine almost about how many pips there? Almost about close to 50 something or about. That should be 111 pips. You can imagine on Euro USD. So if you don't want to take, if you don't want to trade news, just calculate your step using your liquidity concept. You can trade after the news has settled the market back and into the structure. Use your DC. You can imagine this is OMC news came down into this way to trigger off the previous day lows. After this it was Tuesday, Monday low. So that there has been overextended of a price falling down, and then FOMC trigger into the low. Then we have what we have a price distributing into the opposite. You can imagine that. You can imagine that. This is London close. London close. At London close. Normally have that at London close by 19th. 19th. You can see this. You can see this. This is what you can use. 19. Price move back. Price move opposite. That's another pattern, another system that is coming up. Yeah, as London close concept. London close. 1915. Price move back upward into this place, and then you see at least 20 pips or thereabouts. So we'll come back into that 33 pips. 33 pips. See price move upward at 19. What happened? 17. Then we have a range. You don't have it, but you can use your this in here. So don't have it. So we get that on there. Get that on there. May get more on gold. On gold. So that is that for on AMD concept. AMD concept. Yeah, 19. You can imagine at 19, what we have price move back opposite during that news. 19th or 17, 13, 19, very pattern. So the retest to it. Retest. 19 got the retest. So that's what you have. That's what you have. At 19, you can imagine. So we have this, and the price move upward almost about how many pips there? Because of some good pips. And no pips. 106 thereabouts. So it's just a range. Have a range. Then 19th price move down. Price move down. Continuation of that. 19. So that's that for now.